Good morning, everybody. It's currently Sunday, 13th of June. We are going to do the recap of the last week, starting from the 7th of June up until Friday, 11th of June. We're going to start with the analysis, intraday analysis that I did on the 7th of June, prior to London session. We were coming from an NFP Friday on the 4th of June. Still intact the higher time frame bullish trend line. We were in a sort of intraday correcting bearish trend line. This week we had the CPI/inflation data at the end of the week, so we were careful and we were mindful of this data report, and also we had the jobless and job report on the 8th of June itself. We will see going on. So our analysis on the 7th of June, we were expecting a pullback. USD was still weak. We were expecting a pullback to a key level, either 1883 or 1876. Further down was unlikely because the NFP data was really strong against the USD, so we were expecting a pullback to further continue up in a bullish trend. Let's see, also the analysis shared, we were still bullish unless someone else told not to be. Of course, during the weekend, Yellen was talking about interest rates, but nothing was specifically said. Of course, high risk, higher buys, rejection at 1883. Let's see how it went. Monday 7th, we were starting to, of course, Asian session. We see price doing the pullback expected during London hours, during the night hours, and then during London. We see prices approaching 1883 key level, but is failing to break it. Let's go now on the 1 minute, because we are seeing rejection. Of course, a little bit a deeper dip, rejection, higher rejection. Price moves up and still gets rejected above the level. A nice entry would have been after this last tap, because we are seeing that we are creating a trend, higher highs, higher lows, higher high, higher low. So a nice confirmation was around this point to enter buys as per analysis. We are not just guessing. Our analysis said high risk buys after pullback's exhaustion at 1883. Yeah. Tack. And that's what happened. Let's see how then it works out. You see price doing London, doing New York, never gets back to the level. Okie dokie. Here is already is a session. The volume is dying up, so no worries. Price from this moment just went straight up. It's more clear even on the 15-minute time frame. Buyers are in control. Momentum is bullish. There are bigger and more bullish candles rather than the bearish. Fewer and smaller. Clear bullish trend. Let's move then to the, I'm missing here a key level, and 1897, of course, there should be 1897. Okay, so we could have gone from this level 1893 to 1897 pretty smoothly. We then go to the following day, which is the 8th of June. So we saw all this move. We saw overnight that we are going to see overnight reaction at 1892, 1902. This was the reaction overnight. Price went up, failed to make new highs, and then broke down as usual, as per gold behavior. Tries to make new highs, cannot, breaks key level, huge rejection. We were now seeing price how it will behave at previous sensitivity area, which was 1894-ish area of interest, and we were still bullish in trend. We were in a bullish trend. We were expecting, of course, pullback to further continue up. Sells, of course, we could have taken scalp sells here, but since it's a pullback and it's a counter trend, you don't know where it will stop. So let's see on the 8th of June, our analysis that was sent. We were monitoring the key levels. We could have already seen the pullback because, as you can see here, we were already seeing a shift, a top, and then a bounce. But we know that during London session, especially, they tend to do a further pullback and then continue with the overall bias. So we were seeing, as we say, we might expect London volume to retest before moving up. We were, of course, aware that scalps can go either way. This is an intraday analysis. Scalps can go either way. Buys above 1902, clearly. We were also monitoring for sell scalps below 1894, 1897, 1894 area of interest. Let's see how it works out during the London session. Around 1897. We got a top, retest. We got a further dip, retest. Even if it's not clear, okay, break and retest, I enter here is sure. No, you have to check. You have to be mindful that price can further retest the level, but you have to see that price is not breaking these highs. It's not moving up. It's not showing buyers in control. It's still showing sellers. So you can see there's a sort of order block creating. Price then breaks down, retests, and then does the move that we were expecting. So you always have to be mindful of what to look in the chart. Don't just expect price to move the way you want. You see price breaks, maybe you enter here, okay. You either take profits here and set to break even, okay, you get stopped out, it's fine. Is your idea bias changed? You see bias in control breaking up, you see a break, a retest of the level, okay, but now without creating new highs. So what is in this period is creating an order block, is a consolidation period. You can see it starts, okay, let's stay on the sidelines, we will see later. You see it creates an order block. When the price breaks below, you don't just enter. Remember, you don't have to be the first one, you have to be the second one to enter. Break, retest, break, retest on the dot. Clear move. You don't have to rush. This is 40 pips like this. Clear, pre-planned, and waiting on the sideline for the right moment. We are down in a New York session, so we had our pullback below 18. Even if you don't enter here 1897, you enter 1894 as expected, which was a previous area of interest, which was the previous highs around here, and you get 40 pips scalp. Nice, clear. in a few minutes, half an hour. Of course, the bias. Why we don't enter always scalps, counter trend scalps, holding them long? Because it's counter trend, so you don't know where it will stop. And that's also 18 and 89 is a huge area of interest, because 1889, which is like here, look on the left how it reacted. Served as a support, a resistance is now serving as a support. From when? Is doing this job, seen here on the dot, is doing from last weeks. So that's why we are using this data, this level, as a reference. We are not just guessing. So there's a lot of things to be aware of. We spotted live this double bottom here, you see, area of interest. This might be a nice double bottom created with a rejection, and that's where Jab entered for 40k. Price moves up, doesn't even enter. I mean, if you enter here, the stop loss is still untouched by price. Of course, you can have set it to break even, but is the trade idea broken? No. Is it going below previous lows? No. So, okay, maybe you got stopped out at break even after taking profits. It's fine. You can re-enter. The trade idea is still valid. And then price moves further up. As expected, we were expected price to move back up. Why? Because the bias is still bullish. So that's it. That's it for this day. Let's see how it moves from here. Huge rejection. I think today is the day that we have the reports. Exactly, jobs survey we provide. What do we see? What are we seeing here? This is almost the 4-hour candle closing. I think it closed here. We see what we said before. We had a huge rejection above a key level, and price is failing to make new highs. Huge take profit. Huge. 150 pips in a few minutes. Why? Liquidity grab. We have the job report coming up. Let's see how it went, the job report. Liquidity grab, huge liquidity grab. Where it stops? On the dot, 1883, key level. Job report is bad for USD. Price break, bounces up again. You see, profit taking after failing to create new highs. Liquidity grab before jobs report. Actual data shows a weak USD. So it's all in the chart, but you have to know, you have to understand the fundamentals that are behind. This is billions and billions of dollars moving up and down. That's just okay, resistance goes down, support goes up. There's a reason why it does it. Price now moves in a range. We can also move to the following day. Asian. Oh, okay. 9th of June. Let's see the analysis. We saw NFP. We saw the pullback. On Monday, we saw the continuation of the trend. We saw some ranging. We saw some liquidity grab, profit-taking liquidity grab for the job report. We see some ranging. What is the bias? The bias is still bullish. Of course, price will never go up. But the bias is still bullish. So let's see on the 9th of June what the analysis says. We expect the price to move into the 18, still stay in this range. We are expecting CPI data the following day, we're not expecting some big moves today because it's tomorrow, the high volume, high volatility day. We can have some moves, or we can have something, but don't just focus on the pullbacks intraday. So we were expecting either price to move up, retest and go up, or do a deeper pullback and go up again. Tomorrow is the inflation data, so don't take stupid trades. I took a trade, we'll see later, but don't worry about that. So let's move on the 9th. You see, price is not breaking above. There's not enough juice to break above to make new highs. We are expecting in the following days high volume, high volatility, and the day is almost over. It's already done. This was the whole day. No big moves as expected. Why? Because the following day we are expecting big pushes. So we have night, you see, between 1897, 1893, clear, crystal clear. It's the following day now that we have to be mindful. Because, why? Because the following day, on the 10th of June, we have the CPI. And we are not stupid. If you understand the fundamentals, you know that investors, banks are not, if the inflation is good, is bad for the USD, they are not just, okay, at the price that we are now, we will just buy. Now, they are greedy. They want to trap as many retail traders as possible. Why? Because people will say, inflation is bad, we will buy. They will grab the liquidity. They will set price to the price level they want to then have the better. I mean, if you want to buy something, you want to have it as the lowest price possible, isn't it? So why should someone who is moving billions not doing that? So they will move the price down. People will fall for it, will sell. But only investors, banks, the institution, they will know when they will jump back in for the real trend, which is the buys. So, of course, as part of Drive Capital Hungry, we were well aware of it. We will know that we have to expect a liquidity grab to set better prices. The consensus, we're already expecting a higher inflation. We have to be aware that price will not just move up. We will have a huge liquidity grab and to set better prices. So 10th of June, Jeff predicted every single line of what happened. Huge knowledge. So of course we can show higher than expected inflation data, smart money. We already knew about this. We set prices at the level they prefer. Expect pullbacks. Sales should be scalped and managed accordingly. You never know how far the pullback will go. Of course, you don't have to enter at the news. Sell below can be. You see, this is when you are expecting a pullback, a deeper pullback. You know that these scalps here from 1883 below can be almost in trend and not even counter trend, because you know that the intraday bias is sort of sells because you're expecting a pullback. So it can be defined also as in trend. And we will see how it plays out on the 10th. 1883 is tapped, reaction, and breaks below. You could have taken simply this 60, 70 pips scalps as expected. Get out, see that price is not breaking above 1883. A double top. What do you want more? double top at a key level, expecting with the bias that it sells. What you don't? What do you want more to to have profit? Of course, huge liquidity grab here. We will see in the details. New York. The report comes out. Liquidity grab. 60 pips. On the dot of 1870, buyers get in. How many retail traders entered here thinking, okay, it broke below this level, we have to, price will melt, gold will melt. Nah. USD is weak. You're giving higher inflation to US economy. It's not good for the US dollar right now. It's not good for the economy. Investors are scared, are not willing to invest in USD. On the contrary, we are against a safe haven, a precious metal. We see a huge spike up for the inflation, as expected. Nothing more, nothing less. Of course, now the volume dies up. You could be still in. Price is moving up much slower, much slower. See, but it finally gets to also 1902 key level. So we will see. This is during the night. We are going to the last day of the week. Which is Friday 11. Of course, it happened. Most of the volume happened during this day. What we are expecting for the 11th, Friday 11th, we are expecting a pullback. We are not expecting the price, okay, we just straight to the moon. We are expecting a pullback. I didn't know how far the pullback will go. We were expecting a pullback to continue buys. I took trades, of course, with the proper risk management to confirm my bias, and we will see how it works out. But we were expecting a pullback. You cannot just expect price to move up and then to the moon. We have to grab liquidity, to have order flows, and then move up. We'll see how it works out in this day. It was kind of crazy. Price, you see, price, as always, as all week has been, reaches 1902, tries to break up, cannot make new highs, and this is what I saw as a scalp. Be aware of the highs at 1903-ish. Watch out for rejections. We can have deeper pullbacks below 1887. I wouldn't take advantage because I'm stupid, because I'm a beginner, but I'll be aware of those rejections if price is not able to make new highs. Is not able, price get rejected. 50 pips already. Break, retest of key level and moves down. Consolidation, moves down. All day long. You see? Sellers are in control. USD is so strong. So strong. Taps 1876, taps again, and moves further back down. Of course, volume is dying. Of course, the week is ending. We don't expect price to go further below. But look, in the same day, 1902, 1876, 260 pips. If you enter here, because you know, even here, below this rejection, These are lows. You know that price when gold when it does a rejection is strong. You enter here. Okay, I will do a scalp. You go 50 pips. You take partials and set the rest of break even. The same trade is still active. You can even re-enter, scale in. You see, okay, it's now failing to break this level and USD is strong. I re-enter also here. You see, you get profits, you close partials, you set the break even, the trade is still active. You scale in after this big move, okay, breaks below the lows, I scale in. This would have been stopped out at break even. Okay, it's fine. I see a rejection. I may consider to re-enter again. This trade is still active. This trade is still active. That's why you have to be smart and follow. This is what I couldn't do. My bias was buys, and I was waiting and I was looking at 1890s double bottoms to enter buys. Of course, I'm trading 2 cents lots, so it's not a problem. I was well aware. I'm learning how to execute. But if you are a little bit more experienced than me, you could switch your bias. Let's say if I said here, probably only on Instagram, I wasn't able to switch my bias, and that's what kind of hurt me. But this is a clear move, corrected completely the inflation data, completely. So this week was kind of dense. I will go quickly with my trades. So we see at the end only 5 trades I took. At the end of the week, at the start of the week, we saw price continuing up. The idea was right. I got stopped out with 15 pips. If I put the stop below this level, I would have stayed here for 50 pips. No worries at all. I still have to understand and learn the right stop loss positioning and the right timing to enter. Same break below these trades I took this week to prove that I can execute on my analysis. If my analysis then is wrong, it's perfectly fine. I am learning to execute. And you can see my analysis wasn't, all these analyses were made without looking at what Jevan was telling us. Of course, the bias was considering his knowledge, his advices, but I am getting learning to make this analysis on my own. Took a trade, loss, it's fine. I am very proud of this trade that I did not take. Price breaks above key level. I would have entered here anytime. But since I'm journaling last week, you can go and watch my last week video. All the trades I took like this. I enter here, stopped out. This week, I waited to see a retest. And when I see a retest that is failing, I don't enter. Perfect. That's perfect. Save money, save energy. As I was saying, trying to execute my ideas. I see a rejection at the level that I was expecting. I enter. I take 20 cents profit. It's fine. I see that it's not working out. It could have worked out if I held the price, but it's fine. I executed here, and that's what I want to learn. I looked for a double bottom, didn't work out. I looked for a rejection, a deeper double bottom, didn't work out. It's fine. So guys, we will see you next week.